Welcome back. Let's talk about Bank of India. The stock is under pressure because of the sharp rise that we've seen in the slippages of the company, and even the credit cost is at a 12-quarter high. That said, the loan growth of the company is pretty strong. But the stock, as I said, is down 11% because of the rise in slippages. Rajneesh Karnatak, MD and CEO of Bank of India, is now with us to take a few questions. Thank you for joining in. First, if you could explain this quarter-on-quarter increase in slippages, what happened and which is the segment where we've seen an increase, and what can you guide going ahead?
Yeah, so as far as the slippages in the Q4 are concerned, you can see that the increase has been there in this quarter. However, the increase is because of the fact that there has been some slippages in the agriculture and the MSME book, typically the small MSME book and the agriculture book. However, if you see on the year-on-year basis, the slippages have been lower than the year. In FY23, the slippages, whatever were there at around 7,500 crores, this year it has come down to 7,000 crores. YOY it has come down, but on the Q4 number, definitely, as you rightly said, it has gone up.
And has that trend continued, sir, even in Q1, the slippage increase in agriculture, MSME? And what would be the quarterly run rate on slippages, at least in the first 2 quarters, as you see it?
Yeah, so as far as the guidance for Q1 is concerned, whatever the slippage was there in Q1 of FY24, the slippage for Q1 FY25 should be definitely lower than that.
Okay. But Mr. Karnatak, I mean, you're right now at an annualized slippage ratio of 1.45%. Where do you see this number, let's say in the first half of the current year? And, how are you confident that perhaps this, especially the agri slippages, that this will not become a recurring phenomena in Q1, Q2?
So normally the slippages in agri happens during the half year, basically in March and September. So the slippage ratio, as you rightly said, is on a higher side. But the slippage ratio, if you see on a year-on-year basis, it has come down. From March 23, whatever the number was, it is lower than that in March 24. So as far as the guidance is concerned, for March 25, the slippage ratio will be better than this. It will be lesser than this number, definitely for March 25. So I am telling you on the backdrop of the fact that if you see our SMA numbers also, so the SMA number was around 17,000 crore, above 5 crores. As on March 23, it has come down to a good 7,000 crores only as on March 24. So we are curtailing the fresh slippages now through better SMA management, and SMA book has now come down.
No, sir, just for the sake of clarity, can you give us 2 numbers? At the end of Q4, your slippage ratio is 1.45%. Where will it be at the end of FY25? And likewise on gross NPAs. Gross NPAs have been coming down, no doubt. They're at about 4.98%. You're just under 5% at the gross NPA level. Where do you see this number, or where do you want to target this number by March 2025?
Yeah. So as far as the slippage ratio is concerned, we are targeting a number of around 1.20% for the slippage March 25 slippage ratio. As regards the gross NPA number is concerned, you have seen that the gross NPA has come down from 7% plus to 4.98%. We expect further it should be at around 4% in FY25. So we are focusing a lot on recoveries, recovery not only in the cash recovery and upgradation, but also on the recovery in our return of accounts. So that is one part. Apart from that, there will also be a reduction in the fresh slippages through better cash monitoring and collection efficiency. All this will help us reducing our gross NPA further down from 4.98 to a level at around 4%.
Okay, so gross NPAs come down to 4% and your slippage ratio comes down to 1.2% by the end of FY25, right? That's the guidance. So
exactly.
Out of the quarterly slippage of 2,038 crore that you reported for the March quarter, what was the number for agriculture and MSME?
So agriculture and MSME contribute nearly around 50% of the total slippages. So more than 1,000 crore has gone into agriculture and MSME.
Sir, just a final point on asset quality. You are saying that you are expecting good recoveries. Can you share some ballpark numbers with us? Maybe first half, how much are you hoping you can get back by way of recovery? And also a word on write-offs. When you say you'll go down to just under 5% to 4% gross NPA, are you factoring in high write-offs as well? Or is it largely because of recoveries?
So it will be a combination of write-off and recovery. So if you see our numbers for this year, we have done a fresh slippage of around 7,000 crore in the entire year. which is less than the fresh slippage which happened in FY23. So this Q4 number has been a bit of a aberration for the fact that the slippage has been high. However, in the year-on-year basis, March 23 to March 24, our slippage has come down on an absolute number, on an annualized basis. So what we are saying is that if you see our numbers further, the fresh slippage is around 7,000 crores and the total recovery which has happened in the bank, which includes cash recovery, which includes recovery from return of accounts and also upgradation, is more than the fresh slippages. So the ratio is more than 1, which I am not including here write-off. If you include the write-off, the number is further higher. So we are fundamentally strong as far as recovery is concerned, and we expect that the recovery will be 1x plus in this financial year also. So whatever the fresh slippages happens, we will be recovering more than that, which includes cash recovery plus upgradation and plus the recovery in the return of accounts, which are not including the write-off here, because if we include the write-off, the number will be much higher, in fact, on the reduction on NPA side.
So what's the guidance on advances and the deposit growth for FY25?
So as regards our advances and deposit is concerned, you can see from our slides also, presentation, our global advances have grown up by nearly 11 to 12%, and our deposit has grown by 10%, and overall the business has grown by 11%. Advances in fact have grown by 13% plus. So the incremental business increase has been 1.38 trillion in the bank, out of which advances increased by around 69,000 crores and deposit grew by around 68,000 crores. So for the guidance for March 25 would be on the deposit side 11 to 12% and advances side 13 to 14%.
Okay, and what would this do to your net interest margin? What is the expectation in the first half and even for the full year?
Yeah, so if you see the net interest margin, it is also derived from the net interest income. If you see our net interest income for this financial year, year-on-year basis, the net interest income has gone from 20,000 crores to 28,000 crores, which is an increase of nearly 14%. On the net interest margin side, if you see the global NIM, it is at 2.97% as against 3.01% from the previous year, and the domestic NIM is at around 3.4%. So the guidance for the financial year 25 is on the net interest margin side is that our net interest margin on a global level should be at around 2.95%, and this net interest margin on the domestic side should be at around 3.35%.
Mr. Karnatak, just to go back to the asset quality points, I had one last question on it. On the restructured loans, I mean, on slippages, you've told us that your recoveries will be in excess of slippages at an aggregate level. On restructured, as of the end of this quarter, I think your restructured book is just under 7,900 crores. Now, what is the quality of this restructured book? I mean, how much of it can you realistically say perhaps it will slip? How much do you think has the potential to, to be upgraded in the coming quarters?
Yeah, so whatever the slippage in the restructured book had to happen has already happened. So this restructured book has a combination of NPA and the standard book. So we are not seeing much of slippage in the restructured book as such. So whatever had to slip has slipped, and not much of upgradation will also happen. The upgradation will only happen, a very few amount of upgradation will happen in that. So the restructured book will be static, will remain as good as that, because any fresh restructuring we are not doing, because as you are aware, as per IRAC guidelines of RBI, any restructuring tantamounts the account to become NPA.
Okay, thank you for fielding all these questions on asset quality, sir. We'll end on a happier note. Like you said, that your guidance on business growth is about 11-12% on deposits, 13% on advances. So just tell us, 13% growth of the book in this year. Which are the segments that you think will drive it for you?
Yeah, so RAM growth is quite good. Retail, MSME and agriculture, all the three heads we are growing quite better. As far as the agriculture is concerned, our growth is around 16%. MSME is around 10%, and on the retail side it is around 18%. Overall RAM growth is around 15%. On the corporate book, our corporate book is around 45% of our total global loan book. In that we have seen good credit growth. In fact, our credit pipeline is around 50,000 crores as on 31st March 24, which we expect to be disbursed in Q1 and Q2 of this financial year. Out of that 50,000 crores, around 37 to 38,000 crores in on the corporate side, and 12 to 13,000 is on the RAM side. In the corporate side also, let me further clarify to you that it is well spread out in the infrastructure, both power sector, road sector and port sector. On the industry side, it is there in steel sector, textile sector, pharmaceutical sector, chemical sector, petrochemical is also there, oil is also there. Apart from that, there are certain government initiatives where also we are lending under the Gati Shakti initiative, under the PLI scheme also we are lending,
Sure.
and also ethanol sector we are lending. So all come together, there should be a healthy credit growth during this financial year.
Sure. Thank you. Thank you, sir, for joining in. That's Bank of India. Disappointing in terms of the slippage performance in the current quarter, but the management is guiding for an improvement as the year goes by. 1.2% should be the slippage ratio in the next 12 months. Get into a break. We'll discuss market technicals. Soni Patnaik of JM Financial Services joins in on the other side.